Elon Musk has essentially sold the majority of the 10 stakes in Tesla that he intended to sell, and there is assurance that the stocks will rise to $3,000. Up until now, the company's stocks have been moving rather slowly, but in the wake of Musk selling his stock, things appear to be changing. Experts predict that in 2022, the company's shares could rise to $3,000. In our video today, we will examine how this could happen, focusing on the predictions made by Cathie Woods and ARK Invest. Will Tesla's stock explode to $3,000? Will it be advantageous for those looking to invest? Stay tuned to find out. At the end of 2021, Tesla's stocks were sitting at $1,086.19. The year ended on a rather quiet note as Elon Musk essentially finished selling his shares on December 28, 2021, when he sold some for 1.91, about 923,000 shares, and more than 10,000 shares at $1,113. This is significant for Tesla stock because it means that the company's earnings report will now be released on January 26, 2022, instead of December 28, 2021, as previously reported. No major events affected the market as a whole. As the end of January approaches, there are a few metrics we need to keep an eye on. Right now, the company's delivery numbers are the most crucial. Approximately 276,900 cars are expected to be delivered by Tesla, according to approved estimates. There are 261 400 Model 3 and Model Y cars and 15,500 Model S and Model X cars. Many analysts and experts believe that this number could be much higher. The second important factor we'll be talking about as we approach 2022 is Elon Musk's comment that fully autonomous vehicles will be adopted the following year. This means that 2022 will be a huge year for Tesla's stock. Why are we certain that Tesla's stock will soar to 3,000? Well, it's because of ARK Invest. So, what exactly is ARK Invest, according to its website? Thematic investing strategies offered by ARK include market capitalizations, sectors, and nations, concentrating on publicly traded firms that they predict will be disruptive innovation leaders, enablers, and beneficiaries. ARK's principles are distinct from conventional investing strategies and are meant to provide long-term growth. Cathie Woods is the CEO of ARK Invest, a company that made a big investment in Tesla a while back and is now enjoying the rewards after selling a portion of its stock. ARK Invest is a well-known company that seems to know what it's doing. Based on estimations from the business produced a 5-year forecast for Tesla, but buying Tesla stock doesn't require a large sum of money to make a millionaire. After accounting for the company's 5-for-1 stock split, ARK estimated last year that Tesla's share price would reach $7,000 per share in 2024, or $1,400. Based on their most current study, however, it may reach $3,000 by 2025. ARK used a Monte Carlo model with 34 inputs to create this projection, and it has improved its assumptions regarding Tesla's capital efficiency from its 2024 analysis. The high and low forecasts have a combined total of 4,000 possible iterations. Prior to 2019, Woods and ARK Invest estimated that Tesla would pay between $11,000 and $16,000 for each additional unit of capacity in 2024. However, in 2019, Tesla produced 509,737 vehicles and spent $1.33 billion on capital expenditures, a rise of 144,505 automobiles over the prior year, meaning that they invested about $9,200 in capital expenditures for each additional vehicle. It should be noted that this calculation likely overstates the capital necessary for an incremental car, because some capital spending is for long-term initiatives like autonomous data centers and Tesla's vertically integrated cell plant. During its Battery Day event, Tesla said its revised cell chemistry and manufacturing method would lower investment costs by 75% over time. Tesla spent $316 billion on its capital expenditure in 2020, implying a capital efficiency of $10,330 in 2021, assuming a 60% increase in vehicle production. In its most current model, ARK Invest decreased gross capital expenditure per car based on the updated forecasts and the additional year of growth that their model included. It is anticipated that between 5 and 10 million cars would be sold by Tesla by 2025. ARK thinks that because Tesla collects extensive driving data from customer vehicles, the company may be able to earn more insurance profits than the average. Together with underwriters, Tesla debuted its insurance program in August 2019. It is now only available in California. ARK anticipates that Tesla will finance its insurance coverage and grow its insurance business into additional states in the upcoming years. Additionally, given Tesla's cars have better safety profiles than the norm, the company should use real-time data to price insurance in its vehicles, which would significantly reduce customer acquisition costs and increase profitability. In the worst situation we could have if Tesla offers its insurance package with 40 of its cars by 2025, its annual insurance sales might exceed $23 billion. In our bull case, ARK anticipates that when robo-taxis ramp up in 2025, insurance will be folded into a platform charge. This will raise our price target by approximately $60. Based on ARK's previous value estimate, we believed that Tesla had a 30% chance of achieving fully autonomous driving in 5 years, ending in 2024. ARK now believes that the likelihood will be 50 by 2025. Since ARK's most recent projection, neural networks have improved the likelihood that robo-taxis will be feasible by solving a number of challenging issues that were previously assumed to be unsolvable. 30 to 40 million miles of data are sent daily by Tesla's fleet of vehicles, compared to 20 million miles per day the previous year. According to our bull thesis, if 60 of its autopilot-equipped vehicles were used as robo-taxis, Tesla could quickly expand its robo-taxi service and use the extra money to support its autonomous network. However, it's important to note that autonomous driving would significantly increase the dispersion of the projected price objectives. As a result, Tesla could produce an additional $160 billion in EBITDA in 2025. While technological and logistical barriers prevented the introduction of both human-driven and autonomous ride-hailing networks, as shown in gray when manufacturing is not restricted, a human-driven ride-hailing network raises the estimated price goal range, as seen in green for less than 20% of Tesla vehicles sold into ride-hailing in 2025, and in navy for 20 to 70% of Tesla vehicles sold into ride-hailing in 2025. Production limits limit Tesla to less than 4 million units produced annually in many low-end situations, as analyzed by ARK Invest. Last but not least, the purple high-end pricing projections incorporate the anticipation that Tesla will launch a robo-taxi service. The latest forecast from ARK Invest, a firm led by longtime Tesla enthusiast Cathie Wood, whose funds own over $3.2 billion in electric vehicle stock, is that Tesla can truly double its share price to $3,000 by 2025 to become the most valuable, highest-earning company on the planet, led by the richest person in the world. Not only can the company achieve all those superlatives, but it can do so at a rate that leaves Amazon, Apple, and Microsoft in the dust. Investors were encouraged by the forecast, and Tesla's stock rose 6.2% to $698 or $41 billion at midday on January 7. ARK predicts that for the following 4 years and 9 months, Tesla's worth will more than treble, bringing its market cap to $3 trillion. Says renowned accounting expert in the nation Jack Shischelsky. Assuming the number of shares outstanding remains roughly the same as it is now, it's a significant leap of faith. Shischelsky notes that ARK is not thinking about Tesla in the traditional sense. Rather, it is not basing its case on the fundamentals that are generally used to value equities. However, putting a bunch of educated estimates in a mathematical model doesn't always provide a significantly better result than conventional analysis, such as how quickly the car industry will develop and how much of that growth Tesla is likely to take. One thing I don't see in this research is the competitive landscape says. Shischelsky does not criticize ARK's techniques. When you have a firm with such an unclear future, you have to approach it the way ARK did. Shischelsky presents a compelling case in the first place that a number of new competitors are undermining Tesla's present hegemony. Second, Folks intends to allocate $855 billion towards development of EV by 2025, while Ford and General Motors spent a combined $30 billion electrifying their fleets. BMW hopes to have up to 25% of its sales in this quickly expanding market by 2030. ARK predicts that Tesla will reach $3,000, and Honda will have two-thirds of its fleet electric. Tesla sold 500,000 vehicles last year. Therefore, new Teslas on the road would need to account for 8.5 million of the estimated 10 million unit growth globally by 2025. ARK does not provide a specific forecast for Tesla's unit sales during that year, but based on its bulk case of 10 million, we may estimate the figure is closer to 9 million. Thus, would General Motors and Volkswagen simply watch while Tesla takes up 85% of the sales growth over the next 5 years? What do you think of ARK Investments' predictions for Tesla? Comment below.